This year, 2023, my weight increased from 51,000 to 128,000, close to 130,000 in 1 year, from January 1st to December 29. In this video, I'm going to tell you my 4 steps to choosing a great stock and how much dividend income I should be expected to make next year, 2024. And also, I'm going to tell you about one sushi stock that is exploding and what's going to happen in this coming week, New Year. Let's get to it. Happy New Year. So next 1 year, based on my stockbroker, and it's estimated that I could be making 2,800, so 3,000 in dividends. So 3,000, how much is the dividend yield and dividend yield percentage? If you want to know, you can divide this number by the portfolio 128,000, so it's over 2%. So why is it only over 2%? Lots of the great companies only give around 2 to 3%. That's very, very normal. And most of my stocks in my portfolio are at the top 1% stocks of the whole S&P 500. So top 1%. Very, very normal. I don't really focus on dividend. Because if you focus too much on dividend, you could be buying really bad stocks. So I don't want to do that. So in order for you to travel around the world, would this be enough? 3,000? No, absolutely not. So this is the amount that I made when I was traveling around the world. I was trading only 1 to 2 hours advanced options. I invest in great companies. Then I use advanced option to get realized incomes, realized gains. So there are 2 types of gains in stock investing. One is realized gain. So that means you buy a stock, that you sell the stock, that you take the profits, you get cash in your account or in your pocket. That's realized gain. So another gain is an unrealized gain. Unrealized gain is you buy a stock that you hold on to it, so it increases in value. Let's say 1,000, 2,000, 10,000. You still hasn't sold your stock, so it's still in your account, so it is unrealized gains. So this total portfolio value includes both realized and unrealized gain. So dividend is cash in. So the companies gave you that amount of money every year. Some of the companies gave you every quarter. So if you buy so many companies, you could be making dividend income every single month. So if you look at it, June is estimated income 582, and December 2024 is 582. So most of the dividends are given out on March, June, September, and December. Yeah, I have some on the other months, but so far and so few between. So I don't rely on dividend incomes. So how do I make money to support my travel? While traveling, I bring my family around the world. It's from advanced option, trading options, put option, call options. Advanced option is like combining put option and call option. So from December 1st to December 31st, I made short-term gain of over 6,000. And total gain is 4,800. So let's say 5,000. So how about long-term loss of 1,500? In stock investing, especially in US, there is something called tax loss harvesting. So if you make so much profits in 1 year and you don't want to pay so much tax, so what do? We sell loss-making stock. I sold the stock that I do not like, and they are not the top companies, so I sold it. So I lost long-term gain, so offset against my profits, lowering my taxable income. So that's a way to do. But most of my stocks are great stocks, so I only have a few very small amount of losses for this year. And how much did I make the whole year? I can go to November 1st, January 1st, and look at it. So December 31st, 44,000 realized gain. So the short-term gains and profits from selling options, advanced options, put options, call options, those are the main part of this profits. Of course, I sold some of the stocks, but that's very small amount. So long-term loss is 3,800. So total gain is 44,000. So every month I was making around 4,000 or 3,700, around that amount. So if you make that amount, will you be able to travel around the world? I would say yes. For the majority of people, if you don't spend so much money, if you don't waste your money on alcohol or cigarettes or unnecessary things, you can even bring your family around the world. So that's what I did. So if you look at it, most of my gains come from options. It's not stock. Yeah, you can buy and sell stock. Like Upper Stock, I bought 200 stock that I sold. I only gained about 798. Look at that. But for options, I only used 1,500. I gained 497. 259. I gave 204. So that's much better. Look at that. Look at all the options. Of course, the total cost for the whole year was 1.19 million. But you don't have to have that amount of money. So these are the cumulative. So every time I trade, it just add to this number. So every time I make profits, it just add to this number. So total gain is 44,624.34 for the past 1 year, 2023. So that's how you could make money in this realized gain. Then after that, I have unrealized gain, dividends, unrealized gain as they keep all those stocks. So today I'm going to talk about 4 stocks that I'm looking at that's going to be reporting next week. One is WBA. So how do you choose a great companies? First, I look at 5-year trend. If you see the stock going down, I'm not even bothered to look further. So that's my first step. I look at the stock trend, the past 5 years, is it going up? If not, why do I even waste time? So I'm not going to waste time. This company gives 7.35% dividend. So do not be trapped by the dividends. A lot of people invest in companies, the beginners, because this company gives so much dividend, 7.35. What they don't know is that this company, even in 1 year to date, lost 30%. So if you invested 1,000 this year, you will have lost $300. Your portfolio value will have become 700 at the end of the year. So what's the point of getting 7.35% if you are going to lose 30% in the stock value? Do not look at it. So I don't even look at it. So what is this company? This is a pharmacy company. I don't like it. It's gonna be reported on Thursday, January 4th. So yeah, I don't even have to look at it. This is like step number 4. So let's look at another stock. Conagra Brands reported on Thursday, January 4th. Year to date is down 26%. How about 5 years? It's up. Yeah, it passed my first criteria. 30% is not so much, but let's say it passed my first criteria. The second criteria that I'm going to look at is, has it been a public company for at least 5 years? Yes, it has been a public company for at least Maxima. Let's look at Maxima. Yes, since 1984. The third criteria is, has it been in the business for at least 10 years? Yes, it has been in the business for at least 10 years. It was founded in 1919. So easy to remember. And the fourth criteria is, do I like this business? What do they do? Conagra is a food business. So you can go to Walmart, Target, you can see the brands like Buzz Eye, Healthy Choice, instant food. You can microwave food for like 2-3 minutes. You can eat right away. So all these are their brands, sauce, and I don't really like food business. I'm not interested in food business, so I'm not even look at the financial statement. Financial statement will be my fight. The last step, number 5. So for beginners, all you need to do is just know these 4 steps that you will do better than 80% of people in investment community. So it's very, very important. And it pays dividend 4.8%. So stay lower than Walgreens Boots Alliance. Why? Because it's a better company than Walgreens Boots Alliance. The reason why this dividend is higher is because if you want to know this dividend yield, divide how much dividend the company gives by the stock price. So if your stock price goes down, it's very natural for dividend yields to goes up. So that's why this dividend yield doesn't have any meaning without knowing the stock price performance. Yes, 4.8%. This is a better company, so I could. If you were to ask me to choose Walgreens, WBA, and CAG, Conagra, I would invest in Conagra, not Walgreens. And let's look at Sushi stock, Kura Sushi. Let's look at 5 years. Yes, it performs very, very well, 200%, so 3 times the money. Year to date, 60.60%. Yeah, 5 years, so it passed my first criteria. Yes, my second criteria, has it been a public company for more than 5 years, or at least 5 years? Look at Maxima. 2019, 20, 21, 22, 23, 24. So next year, 24, it will have been a public company for 5 years. So now I can put it in my watch list. I want to see next year performance. And has it been in the business for more than 10 years? Yes, it does. It is 2008. So it passed my third criteria. It did not pass my second criteria, which is being a public company for at least 5 years. No. So the third criteria, it passed. The fourth criteria, do I like this business? It's a sushi bar business. You can buy sushi. This is revolving bar. Sushi chef prepares sushi and put it on a tray, revolving around. The customer take it. Yeah, I think they might be able to buy some alcohol. But do I like food business? No. Then let's look at 2020. In COVID pandemic occur, all businesses shut down. So in that situation, this stock's gonna crash. I don't like this stock. I like stock investing, option trading, because even during the pandemic, we can still trade stock options, advanced option. We can still invest in stocks. So I like it. And even better, during the pandemic, the stock price went up like crazy in 2020. So I don't want to buy Kura Sushi stock. Of course, you can buy if you like it, after you do your own due diligence and research. And I'm going to tell you stock number 1, Constellation brand. Year to date is up 6.22%. Not so stellar, but it's still not bad. 5 year, 45.09. Okay, yeah, now I can look at it. It passed my first criteria and going up 5 years. But I would personally prefer like 70% or 80% or over, because that's what S&P 500 does. S&P 500 performs over the last 5 years 70%. So I can show you how S&P 500 does. S&P 500 over the last 5 years. Look at it, the past 5 years, 88.29%. So I prefer stocks that performs better than S&P 500, not 90%. Yeah, let's say it passed my criteria going up. And my second criteria, I'm going to look at it. Has it been a public company for at least 5 years? Yes, it has been a public company for at least 5 years. And has it been in the business for at least 10 years? Then number third criteria. Yeah, since 1945. Yes, it did. So how about number 4? Do I like this business, this type of business? What do they do? It's an alcohol business. Corona, Modelo, beer, they sell alcohols. I don't drink, so I don't know much about alcohol industry. I'm not interested in investing in alcohol brands, so I'm gonna go past. So I don't even need to look at financial statement. See, if you know how to look at a stock in this way, these 4 steps, you don't even need to look at financial statements. You will perform better than 80% of the people on Wall Street. Then you will be a genius. So that's so easy. And Of course, it gives you dividends, so that's a bonus. I don't look at dividend. These 4 steps does not include dividends. I do not care about dividends because I know how to make money with advanced options, consistent income, daily, weekly, monthly income. So easy to make realized gains if you know advanced option. But if you don't know advanced option, do not trade options. Okay, call option, put options, they are very volatile. You can lose a lot of money in a very short time. But if you know advanced option, it's so easy, so much easier to make money and realize gains. If you want to get started, the link is gonna be down below. You can click on it, open a stock trading account, and let's look at next week economics news. Finance, US manufacturing PMI, nothing so much, no big change because it's a new year. Remember, a lot of people gonna get year-end bonus. They already got it, so they're gonna invest in stocks when they come back from holidays. And a lot of portfolio managers, they want to invest in great companies at the beginning of the year, so then they can perform really well, better than S&P 500. So a lot of money is gonna keep rushing in the stock markets. And plus, in 2023, this year, most investors do not invest in stock markets, so they miss out. So they're gonna have fear of missing out next year, 2024. So a lot of people are gonna put money in January, especially in January. So these data don't matter so much. And of course, if US job openings come up higher or lower, I don't think it's gonna move the market. Maybe Federal Reserve President, what do they talk about it? They might move the market a little bit. ADP employment, yes. Initial jobless claims, yes. If it's worse than expected, the stock market might move a little bit higher, But even if not many people lose their jobs, it still can be good news for the stock markets. So it really doesn't matter. But of course, if it's a very big surprise, from forecast, if last month the jobless claims last week was 218. Let's say if this week came out with 2 million jobless claims, of course that could impact the stock market a little bit. But because it's a very surprise shot to the stock market. Other than that, I don't see anything that's gonna move the market so much. Rather, I would bet the stock market would go up the next week. If you have any question, comment down below. I'm gonna answer in the next video. If it's a good questions, and if you want to watch more live and how much I made in stock markets, stock investing, option trading, advanced option, you can check my live videos. Go to my YouTube channel and you can go to my playlist. It's gonna list with all the playlists: advanced option trading, how much income do I make, bond investing, stock market predictions. Go for life is like you can watch it, learn it for the rest of your life. It's really good, and my favorite stock right here. Everything is down here. Share, subscribe. Happy New Year.